1, 2, 3. Okay, my God, yeah, 1, 2, 3, 4. This is the fourth time I am recording this. My mic was having issue after issue, so I finally found out what happened. I wasn't talking close enough, holding my mic. So right now I'm holding right in my mouth. Of course, yeah. It's been a while last time I make a recording. So yes, basically I record and I talk and talk for 20, 30 minutes, and then I realized, oh my God, it didn't record sufficient of my volume. It was all over the place because I was too far from the mic. Right now I'm holding it, so now I figure out the issue. Hopefully the fourth time's a charm, right? They say second time's a charm. No, the fourth time's a charm. Okay, so let's get started. All right, let's get started because the market's open. I was doing this before the market opened. I was doing my first recording right now as well. Right now it's like, oh my God, 10:30. It's always doing like 3 times, 4 times. Oh my God. Anyway, so let's get started. So I was looking at my favorite stock actually, NVDA. I was looking at building on my AI portfolio, and my main thrust is on NVIDIA. Having that for the last quarter. Right. Don't market discount cash flow. I have two model, DCF model and a FCF for cash flow model. So indicate two prices number 168 and wow, now it's 301. Before the market opened, it was 288. Okay, so my FCF model actually does continue to capture current trading data and reflect on the price, underlying pricing. As it goes higher, well, guess what? It adjusts by itself, which is great. It was great, right? So, anybody can do this. DCF, SCF, and I use basically general consensus. I use Yahoo Finance, Finbox, investing. The numbers that people are using, and do the estimation. Right? The whole point is, I understand what this company does. Why is it at this point? Why is projecting these numbers basically? Right, over the years. Now remember, these are projections. The further it goes away, it goes out, right, the less accurate in that sense. Right. Even for year 2025 this year, yeah, all right, 2025. Hey, it could. If they estimate 172, is it going to get realized? Not necessarily, right? So, but you add all these up, discount the future cash flow into back into present, right? Is worth 168, right? For the CF around these 168 to 301. So the point is that if the stock continue to rise and it reaches these points, this is where I back off adding more to my portfolio. But before that, I'm looking for points to buy, right? Until fully realize the project number in that sense. Right? That's how I use it. Yeah. So right now, we've been trading on these numbers. So I was following. I didn't really follow NVIDIA. I was watching it going all these rises. Right, last year, I'm like, okay, fine, that's great. That's great. So it's trending. First of all, I want a trending stock, and then I'll wait for the pullback to add to portfolio. I always buy on pullback if I want. Everybody buy on the pullback. If you want to add stock to your holdings, you don't buy on the breakout. You trade on the breakout, right? You buy the breakout, and it runs up, and then you get out. Right, take your profit. You want to buy on the pullback. Right? That's how you have staying power in actually. You buy and pullback. When do you buy? You buy on the pullback on the bottom of the trend. That's all. Like this. Right. So I'm looking at these as I didn't get in this stock actually until October 7th. That's when I buy the stock, and I use options. I use options to buy. I use options to sell. So I buy the stock and sold options. Yeah. No, that I sold naked option at that time because I didn't discover the lever product on the video. Once I discovered the lever product, then I even can do two times in that sense because I'll explain. I'll explain. So basically, I bought on the pullback. No, okay. So make new high, it pull back, right? So that's great. I'm waiting for pullback. Now the rule is you wait 6 to 8 weeks before you buy the stock on the breakout. Every breakout before 6 to 8 weeks, you don't want to enter it. It's too soon. Chances are we're going to pull back again. It didn't break new high after this high, or after the June 17 high. Okay, and I have 2 points to like 1, 2, and 3. You need 3 points to a trend line. Okay, Actually, you just need 2 point, but you see the low, you see the high, right? You can do a channel. You need 4 point to do a channel, 2 point to do one single line, right? So I I do the single line, and this is a nice little downtrend line, right? Downtrend. I do this pullback, and then next one, wow, coincidentally, look, if you connect these 2 point, you have this line, right? The next time it try to make come back, right? And then it stopped right here on the line and it pull back again. That tell me, okay, this line is valid. It's validating, basically. Okay, good. Because once it validate, so I'm wait for the breakout. When it break that, okay, this is a weekly chart, okay, by the way. Okay, when it break that, that's when I want to enter the trade. When I want to buy the stock. That's when continuation of the trend take place very clearly. All right. So right there, I buy the stock. Also, so options 120 strike right here. I mark it. Yeah. Right, 45 days out, blah, blah, the rule is at least 45 days left. Around there, it could be 38, it could be 52, around there, 45 days out when you sell the options. Okay? And you do not want to carry, I don't carry, some people do this, I don't carry full earnings, right? But this option will expire before earnings, so that's fine. If it's going through earnings, chances are I'm going to close out the trade. Okay? And now we open it if I want to carry through the earnings. I don't want any surprises. I don't want it. Oh, the next year outlook is really, really bad. Your stock is going to drop $50. I don't want to hold that. I don't want to take that possibility. Okay, yes, it might have upside surprises, but that's not necessary. I will wait. Okay, I don't want to take that risk. I don't want that type of volatility in my portfolio. Okay, I want a steady rise. I don't mind these wave up and down wave. I don't want to jump all over the place. There's something wrong with stock if it's jumping all over the place. I don't like that. I don't enjoy that. If a trader, they some people trade around those, so I don't, basically. Okay, so everybody, buy and play differently in that sense. So that's me. So make money on this trade. I'm still holding NVDA. All right, now here's the interesting part. Right, the interesting part is, look, make new high. All right, this is high. The MACD is here. All right, this is the MACD, 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 MACD. Make new high, stop make new high on the price. Look, you make new low. That's why I connect these two peak. Right? It has a downtrend. That's called MACD or MACD, MACD or MAC, MAC, right? D, divergence. In that sense, when there's a divergence, I expect a pullback on uptrend. And so I have to wait before I enter this trade. Matter of fact, it give me a good indication. Hey, that is a pullback. I can enter a trade on a pullback. I can buy more on a pullback, and I wait. Now, technical analysis, you wait for confirmation. So I wait, and you have this. Let me just give you clear. I have this nice hammer pattern. Ah, that's great. I love it because now I connect some line. You can pick whatever. I just want to find an uptrend line, right? And then I even connect another longer trend line. So it went parallel. Look, I connect last low point. I got a long line, and I find point from this. Okay, if I want parallel, it will go for these point. Okay, it give me this level. Great, because it give me a visual representation of levels. Okay, it doesn't make prediction. Remember, I don't use technical analysis to make prediction. Okay, you use fundamental analysis to make predictions. Okay, you use technical analysis to help look for confirmation, to find places to enter the trade, to get in and out, to see, okay, there's a pullback. I see a hammer. I see this line. These good plays to buy a stock. I want to buy at what? 126.25. So if it's 122, great. I want to buy the stock at 122. This is why I put out my sell at 122 strike option 52 days out, because we're out minimum 45 days out to capture the best premium. Okay. All right. So this is the price level I want to buy the stock. That's what I use this for. Right, it's under the price of 168, definitely under 300. Right, this is when it's starting to get fully realized on the fundamentals. Right, and 122 is 40 bucks, 40 something plus. Right, away from 168. Great, I want to buy this stock and hold for the long term. At least hold as long as my fundamental DCF models hold. that sense, right? So that's great. So this is why I actually did. Now here's the other part. I use a more advanced strategy. I do a spread instead this time instead of a naked last time. It's just coincidence. It's 122. Right, that just coincident price. It could be 122, 124. That's fine. It's just general area. But the whole point is, I also bought a 70 strike. I did a spread because I did 2 times more of the contract. Why? That means I need to buy 2 times the stock if my options get exercised. Okay. So 22 delta, its contract is $3.35 each stock. So that's times 100. So it's a $335 is contract or premium that I will gain. Right. If it get exercised or not. Right. And if it exercised, that means I'm required to buy the stock at 122. I use that. I buy the 70, right? That's a spread to offset why? To offset the capital requirement, basically. I have a $50 spread. That means I only need to put up 50, well, $52, okay, to own this option, to sell this, to to sell this option. Okay, instead of a whole 122. So I do 2 times more, basically. I do 2 times. My whole intention was two times. Okay. Because I find a product, well, is that I can have 2 times lever. Now you can say, okay, you can use a margin account, you can 2 times lever. But the problem with using margin account is very high interest rate, double-digit interest rate. While this is a much lower expenses ratio. I pay 1%, that's fine. All right, 10%, 15%. Actually, I think it's 13% on my margin account. I forgot. I get a look it up right now, but it's double digit. I know. Okay. Now here's the problem. Remember this, very important. When you use a lever product, right? Your negative when it go against you come is always more than your gain when it goes up. Okay, interesting, right? But that's how negative compounding works. Negative compounding is very powerful. Negative compounding actually will always cost you more. When it goes down, when you are levered, it will cost you more. When it goes up, you gain less, a little less. Okay, but it will have that effect. But over a long term, it will compound out. If it keep going down, you will lose more money than the actual buying owning the stock. Oh, remember that. So that's why do not use this on the breakup because if you buy it on the breakup, you think it's breakup, but it's pulls back. You lose a little bit more money. But it's great when you buy on the bottom because you're levered. Hey, doesn't matter you gain a little less. You use a little. You have double the amount. Use less capital. Right? The beauty of real estate investing is what? Because you can take out a mortgage and borrow money. You just pay a small down payment when you buy a house. You cannot do that. You don't pay a small down payment when you buy stock. No, the most you get is your a margin account, but at very high interest rate. Right? So when you lever product, yes, it's much less than paying using a margin account. Right? They pay very high interest rate, but problem is the negative compounding. Keep that in mind, so you don't hold that on the wrong one. Otherwise, hey, just buy 2 times. No, 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 don't do that. You use it on a much shorter time period, much shorter time. Now, fundamental takes 6 to 18 months to work out. Okay, so you got to keep that in mind too, right? And so, in essence, in short, when I use a more advanced strategy, okay, hedge fund do this all the time. Okay, they always leverage. All right, that's how you make a lot more money. Okay, you buy on the down, you use it to buy on the down. Well, guess what? If it pull back to 122, and my put options get excited, put options that I sold get exercised. Guess what? It will be a pullback, right? So it fulfill the requirement by use level product. If you use level product, you only use it on the pullbacks, right? Preferably on the bottom of pullback, but who knows, right? Right? But at least you have this much space, right? In that. Okay, so that was interesting. That is a more advanced strategy, right? Continuation, right, of my incursion of AI stock into my long-term holding. In that sense, into the AI portfolio. Yeah, I did my fundamental analysis across the Microsoft, AMD, Meta, and I find NVDA is the top play for me. That's why. And I've been watching these guys. I'm looking for play too. But look, this is hard play. Right? This is hard play. Yeah, they broke the uptrend actually. Right? You have this issue. It's going to 200 days moving average. Now I might have a play, but I need it to basically book this purple downtrend. All right. So I need that before I will have a play on the video. Microsoft. Let's look at Microsoft. I'm sorry, not V. AMD. That's AMD, right? That's AMD. Okay. Microsoft. Yeah. Uh, Going to 50 day, you might have a play. It might have something, but it's not as clean. Google, right? It's not clean like NVIDIA. NVIDIA is really clean. Break, uptrend, pull back, break out, right? Pull back, break out again. Very clean. Right? When I have clean technicals, right? Good fundamentals. Why I want to bother with other guys? Right? This is right, the best opportunities. Okay, I always say look for the inevitable, right? And then look up, and then you will find when you find inevitable, then you find really good opportunities. Right? It's not it's a certainties to good opportunities, not certainty to the outcome. Okay, outcome is high probability in that sense, right? But it certainly is really good opportunities because the chart is clean, the fundamental is great. Versus the other guy. That's why I say mainly my main thrust is the video on my AI portfolio right now. Now, going forward, who knows? It might switch to other guys, right? And the market is always changing. The environments continue to change, so you have to be on top of that. Right? So what I'm looking at is NVIDIA. Is that okay? One day maybe in a chip company replace NVIDIA, better graphic chip, whatever. It will take time, but more what I'm looking out for, I will tell you right now. I'll give you a little hint. Is that looking at the next generation algorithm that does not require so much data, right, to do AI calculations. Now we're talking about AI agent right now. That's what. Look it up, right? AI agent, right? Instead of having to do big data, right? Let's be more specific. So use AI agent. Now that is going to be the next revolution. That means you might doesn't need as many hardwares, okay, to get the same result. That will not destroy NVIDIA. That might like okay damper the sales a little on the short run. But the other end is hey, maybe it's the other way around. Is that okay? Now I have more accurate, less agent. I can run even more models. Now then you need more chips. Okay, so that have two double-sided sword, double-edged sword in that sense, right? It could even boost more sales. Who knows, right? But that what I'm looking for is efficiency. Right? Efficiency in the algorithm, the software side. That is going to catch up. Right? And we'll see how the stock continue to play out, the trade continue to play out. But on the long one, next 3 to 5 years, right? I'm looking at these numbers. Okay. And it's estimate. Remember, it's estimate. It's not for certain, but it's very probable. It's very probable giving everything continue on the same trajectory, on the same line in that sense. Okay. Okay. So hopefully this time really capture my audio. The mic should be all good because I realize I need to hold it close, right, to the source, to the sound source, right, to my mouth. That's all. Okay. That's all today. Okay. And so everybody have a good one. And I talk to everybody next time. Yeah.